Hello everyone and welcome to Markets Analyzers. In the beginning of this year, the price of gold was around 63,225 per 10 grams. It means 6,322 rupees per 1 gram of gold. But just few months later, the gold price is now trading at 72,300 per 10 grams. It means 7,300 per gram. It is almost a 1,000 rupee increase for 1 gram gold price in past 5 months. And it has made a peak of around 74,442 per 10 grams on 20th May. It's a 15% increase from the beginning of this year to the peak that gold prices made. It means your capital would have been increased by 15% if you had invested at the beginning of this year. Okay, then we all know the gold price is increasing, but why the gold prices are increasing? What are the reasons that's taking this precious yellow metal up? And along with that, can I buy gold now so that I can gain in upcoming times? I don't want the past, what the future gold prices will look like. This is the premise of this video. First, why the gold prices are increasing? The second question is, can I invest in gold right now? Before moving on, please hit the like button if you found the content in this video informative at any stage, and try to share the video with your friends, and consider to subscribe to our YouTube channel Markets Analyzers. The first question is, why the gold prices are increasing? Historically, if you look at gold prices, they are always in an uptrend. It means over a 5 to 10 year period, the price of gold will always move up. But if you look at this chart on the screen, the price will form a peak every once in a while, and then the price will stay consolidated before eventually forming another peak. The same thing keeps on repeating. But if you look at the peaks in this chart, the first peak, this first circle was formed in 1979. Then the next peak happened during 2009 to 2010 mark. And then the third peak was in 2020. And now again in 2024, the price is forming new record highs. If you look at all these price peaks in gold, 1979 followed by 2009-10 period, and again in 2020 and now in 2024. First, in 1979, there was a significant economic crisis globally, which is also known as 1979 oil crisis. You can search in Google as well. There was a global economic crisis during this period. Then in 2009 to 10, this was when the aftermath of Lehman Brothers collapse was happening. This financial collapse led to recession in major global economies. Then again, the gold price made new records in 2020, whereas there was a significant market crash in 2020 due to rapid spread of COVID-19 combined with subsequent lockdowns, travel restrictions and economic shutdowns. This led to significant decline in economic activity. So by looking at the past data, whenever the prices of gold traded at record levels like 1979, 2009 to 10 and 2020, in the background there was a significant economic downturn. There was a huge uncertainty globally. So whenever there is uncertainty globally, whenever due to any reasons, if economies don't perform well, the investors will look at safe assets like gold. Because gold will preserve its value over time. Gold is also not backed by any government. Literally, gold prices cannot be controlled by anyone in this world. Even stock prices or currencies can be manipulated sometimes by the central banks, but gold can never be manipulated. The supply of gold is always limited. Gold has always, over the centuries, has maintained its value, making it a stable asset for investors during the uncertain times. If you did not understand, I will explain it in an even simpler way. Try to listen carefully. For example, let's say you are an investor. You are investing in stock markets normally. The economy is performing well. There is no economic crisis. Everything is good. So you will get a good returns on your investment. This is scenario 1. Now let's talk about scenario 2. In this case, let's say due to some reasons, there is a war happening between two countries and you are living in one of those two countries. Due to the war, there will be destruction of infrastructure such as roads, bridges, buildings, etc. There will be disruption to business activities which will lead to decline in economic activity. The government will need to increase their spending on military, the inflation will increase, the foreign investments will decrease. It's like a snowball effect. One will affect another, leading to the collapse of the entire economy. So now you, as a resident of that country, will you invest in stock markets? The answer is no, because the companies are unable to do their business properly, which means the profits will decline and stock prices will fall. The same thing will be happening in real estate as well. So that the option to invest in real estate will also has to be taken out. So now the only option left is the safe assets like gold. There won't be any impact to gold due to the uncertainty in a particular economy, and gold price will definitely increase with the rate of inflation. This is why gold is considered as safe asset. The gold prices will increase whenever there is uncertainty globally, because now investors are getting their money out from stocks and other sources and buying gold, which drives the demand up, leading to gold prices increase. So now the question is, what is happening in 2024 which is leading to gold price increase? The gold price increases happening in 2024 is due to events which are happening from past few years. I will explain the reasons now one by one. And in the end, all those points, when looked at once, will definitely make sense. The first reason, the reason for present rally, began in 2021. In 2021, China's real estate crisis took place. From past decade, China's Communist Party encouraged people to invest in real estate in order to stimulate the economy, promoting social stability, and to create new jobs. As a result of this, there was a huge supply of houses in the market. People were investing everything they had in buying homes. They were buying homes not to live in them, but to sell them for a profit later. So due to this, there was a huge oversupply in the housing market. Then, observing this trend, the Chinese Communist Party, which earlier encouraged people to invest in real estate, started to tighten the lending standards in 2015. Then again from 2015 onwards, the loans to buy new homes was not easy to get. This step was taken by China to cool down the overheated Chinese property market. This made it more difficult for people now to buy homes because they were not easily getting loans. It led to a decline in demand. This decline in demand led to a decline in prices. It led property developers to default on their loans. The home prices crashed. It made people to lose confidence on China's property market. The option to invest in real estate is taken out. The other major investment option for any citizens is their stock market. If you look at the returns that China's stock markets are providing, they're in fact providing negative returns to the investors. From beginning of 2008 to 2024, the Shanghai Stock Exchange has gave negative 41% return to its investors. Their capital would have eroded by 41%, let alone the gains. The trend is similar in recent years as well. But if you compare Indian stock markets like Nifty, from 2008 to 2024, it has gave 260% return to its investors. That's how bad the Chinese stock market's performance is in the past decade. Due to strict regulations, the Chinese citizens are left with very low investment options elsewhere. If they try to invest in other currencies like other country currencies, they will need to follow high rules and regulations. So the only best and simple alternative investment left for them is the yellow precious metal called gold. This is one of the reasons behind gold prices move. And the second reason for global gold prices rally is due to central banks buying across the globe. If you remember, due to Russia-Ukraine war, Russia was sanctioned by Western countries and they also froze significant amount of Russia's foreign currency reserves. It is technically Russia's money, but due to the sanctions, Russia was unable to use that money. Now, coming to China, China holds around $800 billion of US national debt. China is the second biggest holder of US national debt after Japan. Now, let's say in future, if any problem arises for USA against China, they might also do to China what they did with Russia. Keeping this in mind, China is selling US bonds. According to estimates, China has sold $300 billion worth of US bonds in between 2021 to 2023. Why they are selling US bonds? As I have earlier told you, it is being done by China to reduce dependence on US dollar. I hope you clearly understood this part. Now, that huge amounts of money that China is getting by selling USA bonds is being used to buy gold. China is buying gold. It means Chinese central bank is buying gold. It's not China. They are buying gold for past 16 months in a row. China is now holding around 2,257 tons of gold in their reserves. This huge buying from China's central bank along with their citizens is pushing the gold prices upwards. So I hope you now understood the reasons why China is bulking up their gold reserves. Now the question is, can I buy the gold now? Will this rally continue in future as well so that I can gain? There is one factor which can influence future gold prices. Based on that, the future of gold prices will depend whether it could be upmove or downfall. It is the US central bank interest rate decision. If interest rates starts to come down, then the gold prices will move up. They're inversely proportional to each other. If interest rates are not coming down, then gold prices might not be as attractive as it is now. The gold prices will also rise if Indian rupee falls. If you just want a single word answer, should I buy gold or no? I would not buy gold. I will now tell you why. Because majority of Indians buy gold for long term, whether it could be jewelry or gold ETFs. In the long term, the equities will always outperform gold. In a span of 1 to 2 years, in few occasions, gold might give better returns than equity markets. But historically, if you look at longer span like 5 to 10 years, it is always equities that have performed better than gold. I will not only tell theoretically, but I will explain with numbers as well. In last 5 years, gold prices have increased by 55% on an average, including this recent rally. But if you look at India's top benchmark indices like Nifty, it rallied by 85%. I am not talking about particular stocks, I am talking about the whole index as well. So the index itself gave 85% returns. Similarly, if you look at past 10 years data, gold prices have increased around 97 to 100%. It means your capital would have been increased 100% in 10 years. If you had bought gold worth 1 lakh, now it would have been worth 2 lakhs. Whereas if you look at Nifty, it has moved up by 174%. It has clearly outperformed gold. So what I am trying to tell you is, if you are investing in gold for next 5 to 10 years means you will definitely make less returns than the returns you will get in stock markets over the same period of time. So friends, this is the video. I hope it was good enough. Please do like the video, subscribe to our channel, and try to share the video with your friends as well. It will be very helpful to us. So I'll come back again with another interesting video. Until then, take care and have a great time.